Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Monday, 22nd September. Coming up on the show, well, after another record-breaking day on Friday, stocks look set for a more muted start to the week. Gold, though, continues to march upwards. Big tech firms are sent scrambling after President Trump's visa announcement. And Chinese EV maker BYD sees its shares slide after a big thumbs down from Warren Buffett's Berkshire Hathaway. So grab your coffee and let's own the morning. Okay, let's kick off with the three things you need to know by looking at where the opening bell what the markets will look like once the opening bell rings. And it's looking like a more subdued start to the week after all three main indices hit record highs on Friday. It was a strong week across the board after the Fed cut rates, and in fact, that's pushing gold prices higher again this morning, jumping to a fresh record well above $3,700. Now, the precious metal has been on the up for 5 straight weeks now, and bullion-backed ETFs are also flying on bets of more Fed easing. But it was a different story for crypto. Bitcoin was rising before the Fed rate cut, but now that it's happened and the markets are pricing in more cuts, it looks like there's been a fair bit of profit taking by crypto investors. Okay, the next thing you need to know about is all about work visas. Now, major tech companies and foreign governments are rushing to respond after President Donald Trump late on Friday announced plans to impose a $100,000 fee on H-1B visas. The move looks like it could upend the program that underpins America's tech workforce. It's a sector that is highly dependent on Indian and Chinese workers. In fact, over 70% of H-1B visas go to Indian workers. Now, unsurprisingly, Indian tech stocks fell sharply in early trade today, but perhaps a bit more of a surprise is that the big US tech firms like Microsoft, Amazon, Alphabet, Meta and Tesla, well, they barely moved, as you can see there in the pre-market. Now, the third thing you need to know about is that the Trump administration has been talking up a potential TikTok deal this weekend, with the president telling Fox News on Sunday that Rupert Murdoch and his son Lachlan, who is executive chairman of Fox, are, quote, probably going to be involved. The president also said that Oracle executive chairman Larry Ellison and Dell Technologies CEO Michael Dell are also likely to be involved. Now, remember on Friday, Trump had a call with China's President Xi to talk about approving the future of the US operations of TikTok, a call that Trump described as productive. Okay, well, that brings us nicely onto what you need to watch this week. Here's Miles Udland.
All right, time now for what to watch, starting off with the S&P 500, which will look a little bit different on Monday's opening bell. Emcor, Robinhood, and AppLovin are set to join the index. The three companies will replace Market Access Holdings, Caesars Entertainment, and Enphase Energy prior to the start of trading on September 22nd. Taking a look at the earnings calendar, some big names reporting include Micron, Accenture, and Costco. Costco announcing results for the fourth quarter on Thursday. Analysts are expecting Costco's U.S. and Canadian stores to do well, and overall sales to rise by mid to high single digits in the quarter. But international sales have slowed for 3 straight months, hitting their weakest point in almost 2 years. Moving over to the Federal Reserve, at least 11 different Fed officials are set to speak next week, including Fed Chair Jay Powell. Now, the Fed cut interest rates by a quarter point at the end of its September meeting last week, and investors will be keeping a close ear on comments from newly minted Fed Governor Stephen Miron, who will speak at the Economic Club of New York on Monday. And speaking of the central bank, the Fed's preferred inflation gauge, that's Personal Consumption Expenditures Index, is set for release on Friday. Economists are forecasting headline PCE rose 0.3% in August, while core PCE is expected to rise by 0.2% over the prior month.
Okay, well, let's look at some of those stories in a bit more detail. Well, joining me now is Ethan Devitt, Monetta's Senior Investment Advisor. Ethan, thanks so much for joining us here on Market Sunrise. Well, let's start with the Fed cut last week. We're seeing another surge in gold. So the markets seem more focused on this dot plot and the fact that we could have 2 more rate cuts in 2025. Am I right in that analysis?
I'd say that's exactly right. It's interesting. The 25 basis point cut was probably in the range of what was expected, definitely at the lower end of the range. I think the consensus, with one exception, of the board was maybe a surprise because there was a fear perhaps that they would go too big too soon. And we know that even one rate cut is still surprising to some onlookers given the resilience of the economy and just how robust and in fact the equity markets have been and the consumer has proven to be. So I would say that now this in the gold price, it's always the two reasons for the gold price rising, not only concern about dollar debasement, but also a general concern about fiscal policies and governments. And that has been really percolating in the background for some time. So I'd say it's a combination of both of those factors.
Well, you mentioned there that there was one person who didn't vote in line with the rest. So later today, we're going to be hearing from him. It's Trump's Fed board pick, Stephen Myron. He voted for a 50 basis point rate cut. How do you think he's likely to justify voting against the consensus?
Well, I think that we all know where President Trump would like the direction of rates to go, and it's a lot lower than the current level. And he was certainly expected to vote in this way. I think the surprise has been that some of the other Trump-appointed board members did not vote for a larger cut. As I said, it certainly goes against the economic orthodoxy to have a large cut at this juncture, given that inflation is certainly not abated yet. It's heading in the right direction, but it's not, I wouldn't say that job is done. So I'd say also Stephen Moran has been speaking quite a bit, whether it's on tariff policy or other policies. And I think that certainly the new role has perhaps given him a new platform. But one does need to watch one's words quite carefully to ensure that a policy is depicted consistently within the government. That hasn't always been the case.
Now, we're getting quite a lot of economic data this week. I guess the one that many will be looking out for is the PCE index. It's the Fed's favoured inflation gauge. It's out later on this week. What do we need to see here to give the markets a sense of confidence in the Fed's future easing path?
We certainly need to see it in line with expectations, if not perhaps surprising on the downside, because what we have seen, and this is not just in the US, we've seen quite a stubborn stickiness of inflation above the 2% level, whether it's 2.4, 2.5, it's still a little too high for comfort. In the UK, we of course blew right through that by having a 3.8% level that stuck for 2 months. And that's just a reminder as to the propensity with surprises for them to really quite shock markets. We do have this drumbeat, I'd say, at the back of deflationary impulses that have been going on for some time, well predating COVID, the gig economy, the fact that generally things are getting cheaper for the most part. But then with this potential for spikes in the service inflation, and we know that energy is low, so that's at least keeping things low. And I don't believe the tariffs have fully seen their transmission effect yet. So therefore, there is still a propensity for surprise. We need to see something that's considerably showing that the inflation's moving in the right direction.
Okay, let's talk a bit of geopolitics and a bit of corporate news, all rolled into one here now. And over the weekend, President Trump bigged up the potential of a TikTok deal, even mentioning the Murdochs. And this is after his Friday call with China's President Xi. What do you make of all of this, Ethan?
I think this TikTok deal and the narrative around it is really the proverbial can that's getting kicked down the road quite a bit. We have not seen anything really concrete come out of this. We know that there has been somewhat of a change of a policy and a change of face in terms of the desirability of doing a deal. I think this scene has been much more desirable to have now the US counterparts involved in this. And I suppose it's being shopped around as a very lucrative thing to participate in. And we know in the aftermath of the Charlie Kirk assassination just how critical TikTok is to that critical segment of spenders and the consumers with discretionary income. So this is by no means something that we will want to see disappear from the social media landscape. So I'd say I wouldn't hold my breath for anything concrete being announced in the near future, but it is good to see that it's at least still on the drawing board.
But then on the tariff front, Ethan, surely the US and China need to get a deal done pretty soon. I can't imagine President Trump is happy with just 30% tariffs on Chinese goods right now.
There is that pressure, and I think what we know is that the game perhaps is far more complex than many commentators would initially have given it and have thought that would be, in that China, we can see from its stock market, has been doing quite well recently. very mixed economic data there, but certainly a sense that it had been oversold. So that strength that we're seeing in the background from China around AI, around its technology, I think that is suggesting that maybe who has the upper hand in these negotiations, really. We know that there is perhaps not the same dependence on Chinese imports that we would have thought. There's much more diversification. China has the ability to do bilateral deals with many other trading partners. So maybe it's not as dependent on the US tariff policy as had previously been thought. So I'd say quite a bit of complexity there. We will see a deal. It probably will not be a big bang announcement. There will be some diluted terms that we hear about. And really, again, we'll have to watch that one quite closely.
Ethan Devitt from Metsera. I'm afraid that's all we have time for. Many thanks for your thoughts here on Market Sunrise.
Thank you.
Okay, we've got some breaking news. A major deal in the pharmaceutical space. Pfizer will acquire Metsera, an anti-obesity drug maker, for $4.9 billion. Now, Pfizer will pay $47.50 per share. And then if certain performance milestones are met, the price will go up another $22.50 per share. Now, this comes after Pfizer's own obesity treatment flopped earlier this year. Now, Metsera is developing a handful of experimental weight loss treatments, including one that is a shot that could be taken less often than those made by Eli Lilly and Novo Nordisk. Metsera shares are soaring on the news, and shares of Pfizer are rising ahead of the open too. Okay, coming up on Market Sunrise, Warren Buffett closes the door on one-time, long-time investment. We'll tell you which one. Plus, the S&P 500 is getting a new look today, but one of the new companies isn't so well known. We'll explain the business behind MCOR. Stay with us on Market Sunrise. Time for a break. Welcome back to Morning Brief Market Sunrise. Now, trade relations with China are in focus as President Trump heads to the UN General Assembly this week. It comes on the heels of President Trump's call on Friday with Chinese President Xi Jinping. Eurasia Group founder and President Ian Bremmer spoke with Julie Hyman and explained where things stand now between the world's two largest economies. Take a listen.
I think it'll be more stable. So in that regard, it'll be more predictable. And, in the pre-Liberation Day run-up, it wasn't. People were expecting that there were going to be, sort of big hits that the Americans were prepared to take, or else to lots of other economies. And of course, Trump has been, quite hawkish on China in his first term, as was Biden. There's now a shift. We are very close to announcing the details of what this TikTok deal is going to look like. That wouldn't happen unless there was a summit meeting where the Chinese and the Americans are exchanging levels of confidence that they are going to improve their relations. The United States recently reduced some of the expectations for a defense aid to Taiwan, making the Chinese quite happy about that. There's been a lot of talk about restrictions from China on the precursor chemicals for fentanyl export. And those chemicals are needed. So it means a much better capacity for the Chinese to know which customers they're going to and restrict other sales. If that happens, that's going to be a fairly significant piece of the tariffs that come off from the United States. So all of those things are in train. But that's very different from saying that China suddenly is going to trust the United States. No, those summit meetings you saw with the Shanghai Cooperation Organization, as well as then with Putin and Kim Jong-un, that's where China's heading. It's building an alternative where they're telling countries around the world, you can't trust the Americans, they're unreliable. You can trust us, work more with us. So clearly, long term, this is going to be about more decoupling and more fragmentation in what had been a more globalized environment.
And for markets today, the S&P 500 is getting a new look. Three stocks will start trading as part of the index: Robinhood, AppLovin and MCOR. Now, while Robinhood and AppLovin are more known to investors, MCOR stock could be one to watch as it's already jumped 38% this year. But you may not know what the company does. Julie Hyman explains.
Well, the S&P 500 quarterly rebalance going into effect. That means new stocks for the benchmark index. At the start of trading on September 22nd, 3 new names will enter the index: Robinhood, AppLovin, and Emcor. Well, Robinhood and AppLovin are well known to retail investors. Emcor, not exactly a household name. So what exactly does the company do? It's based in Connecticut, and it's one of the largest specialty contractors in the U.S. and a leading provider of electrical and mechanical construction and facilities services, building services, and industrial services. The company's origins go all the way back to the 1800s when it supplied water to some residents of Queens and Nassau counties in New York. After a century of mergers and acquisitions, it took the name Emcor in 1994, and in 2000, the company officially began trading on the New York Stock Exchange. It now has a market cap of nearly $28 billion and more than 40,000 employees. Inclusion in the index can elevate a company's profile and boost demand for its shares from passive investment funds that track the index. Companies must have a market cap of at least $22.7 billion and meet profitability, liquidity, and share float standards to qualify for the S&P 500.
Well, coming up on Market Sunrise, the top trending tickers on Yahoo Finance will explain the big moves in Snap, BYD and Oklo. Okay, we kick off trending tickers with BYD. Now, shares of BYD have fallen over 3% in trading overnight in Asia. The news driving the action is a report that Warren Buffett's Berkshire Hathaway completely exited its stake in the Chinese EV maker. Berkshire held the stock for more than 15 years, first buying the stock back in September 2008, 225 million shares, and it started offloading the stake in mid-2022. Its holding dropping below 5% last year. Okay, we're sticking with cars now for our second trending ticker. We're watching the shares of Porsche. The German automaker is under pressure after slashing its profit guidance, weighing on the company, US tariff policy and pressure in China. The company also delaying its electric vehicle rollout due to weak demand. The trend also rippling to Porsche's parent company, Volkswagen. The company says the hit will be roughly $6 billion. Meantime, Snap shares are soaring ahead of their opening bell. While there isn't one clear catalyst for the move today, the stock has been on a tear over the last week. Snap said on Thursday more than 1 trillion selfies had been shared on its Snapchat app last year. And just over a week ago, the company announced the second version of the software for its augmented reality glasses. Despite the recent gains, the stock is down more than 24% year to date. Finally, check out the shares of Samsung. The stock is jumping in trading overnight as the company got a boost from Nvidia. Reports say that a Samsung memory chip cleared Nvidia performance tests, which means that chip can be used for AI accelerators, which are key in training models like ChatGPT and DeepSeek. The approval also allows Samsung to finally compete with other rivals in the space like SK Hynix. It's been a long road for Samsung to get here. It first announced the development of the HBM3E chip over a year ago. All this is coming as Nvidia gave a major boost to struggling American chipmaker Intel, taking a $5 billion stake. Here's a look at what CFRA senior equity analyst Angelo Zeno told Miles Udland on market domination about the impact of the deal on the broader chip sector.
It's definitely a net positive for both companies. And the question is, how much of a positive is it? And what people have to realize is listen, Intel now, and this is all product oriented, right? What people need to realize is there's no foundry revenue that's coming here. NVIDIA, it remains to be seen whether or not they decide to take a piece of that foundry business or, become that white knight for Intel. Our view probably over the next 12, 18 months is they start giving some token business on the foundry side, start kind of, seeing what Intel is capable of doing on that side. So that's the big reason for the magnitude of the increase. Ultimately, listen, the fact that Intel gets in on the product side, they're across NVIDIA's ecosystem on the AI server side is a good thing. But nonetheless, the question is, to what magnitude are they going to see a jump up in revenue, and how much is that going to help the earnings leverage? Obviously, all the investments that we've seen, whether it be from the U.S. administration, SoftBank, and now NVIDIA, it is all dilutive to existing Intel shareholders. And I think those shareholders need to recognize that. So this is going to be a long tail. It's going to be a long story before we really understand the clear benefits here for Intel. And we do think they could potentially reap some significant rewards from this greater partnership. But right now, we just have to wait and see. But for NVIDIA, this is a huge positive in the sense that it gets them closer to the Trump administration, gets them on their good side. And of course, we're waiting on potentially a Blackwell version approval in China, which hopefully we get. But that's all going to be dependent on the China-U.S. trade negotiations.
Okay, time now for Call of the Day. We're going to look at nuclear energy and one startup that's getting a lot of attention, Oklo. Over the weekend, Wedbush raised its target on the stock to $150. As a so-called fast fission developer, the company is in the middle of planning and certification for a nuclear power plant design, nuclear waste recycling and producing radioisotopes. Investors have certainly noticed it. Its shares are up nearly 2,000% compared to a year ago. That's when it went public through a special purpose acquisition company or SPAC merger. Electric grid analysts expect the United States to need more than 80 gigawatts of new energy capacity over the next 20 years. That's an immense opportunity for nuclear energy companies like Oklo. The US government is trying to speed up the process of building these reactors with multiple executive orders from the Trump administration aimed at supercharging the nuclear energy market in the country. Wedbush also believes that Oklo is well positioned to advance nuclear energy to power what they call the AI revolution. It's certainly one to keep an eye on. Okay, before we go, let's get a check on the markets. Let's start with Asia, and shares here rose following Friday's Wall Street rally, and Japanese equities advanced after concerns about the Bank of Japan's plans to offload its massive ETF holdings eased. Let's turn it over to Europe now, and it's a bit of a different story here. Shares across the region dragged lower by those profit warnings from car makers that we told you about earlier, Porsche and Volkswagen. And finally, let's take a quick look at US futures and how the markets on Wall Street are likely to open after that opening bell rings. Well, it looks like a pretty muted start to the week. It's worth noting, though, that Goldman Sachs has actually raised its year-end target for the S&P 500 to 6,800 from an earlier 6,600. Why? Well, it points to a dovish Fed and resilient corporate earnings. We'll have more corporate earnings to watch out for this week. Don't forget, Micron and Costco are all on deck. Okay, that is it for Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. Coming up next, join Julie Hyman ahead of the market open on Morning Brief. I'm Ramzan Karmali. Go own the morning.